The housing market has begun to cool off in some areas, but our next guest says sky-high real estate prices led young people to invest elsewhere, many turning to crypto. UBS Global Wealth Management Chief Economist Paul Donavan joins us now. Paul, good to see you here. My Twitter feed has been around the clock on discussing this note you and your team put out here. Before we even get into it, what made you sit back and write this?
Well, funnily enough, it's delving back into the mists of time when I began my career as a junior economist here at UBS covering Japan. And of course, Japan in the early 1990s, the younger generation were effectively locked out of the housing market, and they turned to gambling and to high-end consumption, because what was the point of saving for a house deposit if you were never going to get enough money to do it? And looking at what we've been seeing with crypto and also with meme stock investing and the very strong bias to younger people getting involved in this, it did seem to me that there was some kind of correlation going on here, just as I'd seen in Japan 30 years ago.
And so for a lot of people who have to take losses on crypto over the course of this year because of those investments, what does that mean on the other side for what they were hoping to be able to pull out of those investments, perhaps to eventually put back into a home?
Well, so I don't think necessarily that a lot of the younger participants have regarded these as investments, not in the sense that a proper asset is an investment. Instead, they have regarded these as a gamble. And that's very, very important, because let's face it, if you've decided, look, I'm never going to be able to save up a deposit for a house, I'm never going to be able to afford to buy a house myself, then you have a choice. You can go out and blow the money on a new television or a holiday, or go and have fun, or you can gamble with it in a speculative way. And that has to have an element of fun about it as well, because you're competing with, holiday, invest in Bitcoin. I mean, which do you choose? And that's why things like the sort of the cult atmosphere around a lot of this crypto, the message boards and the community and all the rest of it, it creates that element of fun. But that means that the losses are not necessarily the same sort of impact that a loss of a proper investment would have.
So is interest in buying activity in crypto, and I'll even add meme stocks here, is that holding back the full potential of the housing market?
I don't think necessarily you can say that, because the housing market has sort of priced out a group of younger participants. And of course, the point of this research is it's not unique to the United States. I mean, we were looking here using BIS research on crypto ownership at a number of countries. And it's very, very telling that any country where you see an increase in unaffordability of housing, those tend to be the countries where you get the biggest increase in activity in crypto from the younger generation. I mean, essentially, it's men under 35 who live with their parents that are buying crypto. And so this sort of pattern is something that we've been seeing. It is a function of a housing market where you have perhaps a shortage of supply, you've got strong demand, you price out a certain group in that society, and then they simply change their preference and say, oh, well, I've got to wait to inherit property. I'm never going to be able to buy it myself. What else can I do with my spare cash?
Paul, I'm going to go left field here. When you think about what the housing market could benefit from with regard to blockchain technology and how that could revolutionize even the home buying experience, even the selling experience and deeding later on, even for those assets, and knowing almost to a granular detail level exactly what has gone into a piece of property, what goes through your mind, and how long out could that be achieved at this point? How far are we from seeing something realistic come to the table?
Well, I mean, I think the thing about blockchain, what we got to remember is blockchain is designed to be inefficient. That's the whole purpose, because you've got to prove the ownership and so on. There are sort of inefficiencies built into the system. And so when we look at a lot of countries which have got established rule of law, very established property rights. I mean, we go back to the Doomsday Book over here in the UK. The necessity of putting property on the blockchain. I mean, if I want to find out how much my neighbor paid for their house and how much of a mortgage they've got on it, I can do that. I can go to the UK Land Registry, go online, takes 30 seconds, you've got to pay a small fee, all that information is available, there we go. So I don't think that necessarily in that sort of situation, adding blockchain makes the remotest bit of sense, because we've already got all the information we need, and it's far more efficient doing it in the way that we do it. Where you don't have rule of law, where you've got a more anarchic situation, there perhaps things become a little bit more significant. And there, the security of being able to prove ownership suddenly becomes more meaningful.
UBS Global Wealth Management Chief Economist Paul Donavan. Paul, thanks so much for taking the time here today, and have a great weekend.